Well, good afternoon. It's Friday, the 24th of April, and I hope this finds you well in these very strange and interesting times that we all find ourselves dealing with. Look, today I'm going to carry on from some of the previous videos and emails that I've sent in terms of talking a little bit about the health crisis, what that means for our economy, looking at markets, investments, and what might lie ahead. And look, the title of this week's article is In the Shadows of the Peak. And the first part of this is really the peak of the coronavirus infection rates that we're seeing in the developed world. There's been three waves. Firstly, one through Asia, then through Europe, and most recently the US. And the US is starting to get past its peak rate of infection. So we're getting through the initial hit of coronavirus around the world. I say around the world, that really doesn't take into account the developing world, and I think we are going to see a real human tragedy in those parts of the world ahead. But focusing on how countries have dealt with it so far, and they have all varied to a certain degree. On one perspective, you're looking at the US and the UK, where they seem to have taken a policy to really let the virus run very widely throughout the community. The death toll has been horrendous. Italy and Spain, I think it's just a case of just not being prepared, and the same thing has happened. And then you get the other end of the spectrum where countries like Australia and New Zealand have managed to take, and South Korea have managed to take measures to contain the virus, and now to the point where we're looking at potentially eliminating that virus very, very effectively. But it does leave us with the lingering problem that we can't let it back into our shores. So how can we fully open up if we can't let it in and our health system and our community can't deal with it? So they are very contrasting approaches, and it'll be really interesting to see how leaders are judged in the future about how they've handled this and the collateral damage that's been caused as a result of these shutdowns, and that damage both being economic and social for what ultimately may turn out to be is a pandemic with a mortality rate not that much higher than the flu. I, for one, am very glad to be in Australia and our approach, and knowing that my loved ones are safe. And I do believe that we will see developments in treatments and vaccines that will see us through to be able to eventually open up. But it may take longer for us to open up to the rest of the world. I'm optimistic about where things lie in the future, but there is that big elephant in the room in terms of, well, what does the immediate future have installed for us from an economic perspective? And that's really the shadow. Now, we've seen the peak in infections, we've seen the big hits, the big shutdowns of the global economy. Now the conversation is starting to tend towards the reopening. Well, it's not going to be a V-shaped recovery. Make no mistake, what we've witnessed in terms of a global shutdown of the economy has been the biggest hit since the Great Depression. These things don't just start up again. Last night, we saw 26 million Americans have filed for unemployment benefits. It is literally off the charts in terms of any other economic hit that we've seen. So a V-shaped recovery is not a reality. It's going to take several years for us to get back to where we were in February. But on the plus side, we're going to see probably a negative quarter in March and a negative quarter in June, but we will return to growth. And that pathway will start very, very soon. And that's a reason to be optimistic. And perhaps that's what the markets have been looking at recently. Markets, as I've mentioned before, start to look through events. They start to look through the other side. Well, the problem is it's impossible to see what the other side is of this scenario. But markets have rallied pretty hard over the last few weeks. It's probably a little bit too hard and a little bit too fast if I put my own observation on it. And typically when we see shocks like this and corrections like this, then markets do ultimately get to retest those lows at some point. And I expect we will see that over the next 1 to 2 months as the reality of the economic situation starts to set in. But that said, we look at where our market was a couple of months ago at 7,200 and we're at 5,200 now. Now, I do think we will see the market head lower and start to get close to those lows. But the numbers in the long term are now on our side. And we do know that the markets have never failed to make a new high in the future. It may take time, but certainly the risk and reward is much, much better than what it looked like 3 months ago or 2 months ago. But the way to approach this is with patience, expecting things to get worse before they get better, and selectively deploying capital, knowing that you're doing this as a long-term investor. And these are the conversations that I've been having with many of you and will continue to have with many of you. And the most important thing is we don't need to be in a rush. These things will take time to work their way through, and this ultimately will be a good opportunity for investors. Now, I'm not going to talk about a financial crisis because we're not in one. The banks are very, very strong. And in fact, the banks are actually able to access some really, really cheap funding. They're able to access funding at 0.25% from the RBA. And you may have seen a few ads out there on television and around the place about really, really low fixed term mortgages down at 2.09 and 2.19. It's quite incredible. Well, the banks are actually able to access this really cheap source of funding and provide those cheap loans to consumers. And that's going to be really, really important for our recovery as well. And another sideshow out there is the oil crisis. It's just amazing that effectively we're seeing negative oil prices where basically sellers are having to pay buyers to take the oil off them. We are in truly incredible times, and certainly petrol should be quite cheap at the Bowser pretty soon. What else might be on the horizon? Well, this is just such a big economic mess, and the government has thrown everything but the kitchen sink at it. And that's a really, really, really good response. And I think that's another reason to be optimistic in terms of the power of the government response to this crisis around the world. But also what we probably will see, and there's been a lot of talk, some talk coming out recently here about tax reform. I think everything seems to be on the agenda here. And look, the government's probably taking the approach, let's not let a crisis go to waste. And I think this can be a good opportunity for Australia. And with everything on the table, capital gains tax, possibly franking credits, superannuation, there's no doubt that we are going to be in for a period of a lot of change in this area. And if the changes can be calibrated correctly and it helps Australia's productivity and helps our recovery, then that can only be a good thing. Long and short of all this, in the shadows of the peak, we're very much at the beginning, and there is so much ahead, and there's so much going on. No doubt that's going on in terms of the wider world, but also in your own lives as well, as we adapt to living more inside our homes and spending more time with families and changing the way that we interact with each other. I've had some really interesting conversations with a number of you that have included things like new pets joining the household. Well, the Gilmour family has just committed to a kitten. So our first pet, after the fish, which wasn't terribly successful because they're no longer around, but we have a kitten in the house due very soon, and the kids are going to be absolutely chuffed. So there you go. There will be a permanent change in our household as well. So anyway, I hope this finds you safe and well, and I look forward to chatting to you very soon. Bye for now.